So I think we're all looking at it exactly the way you said it, that the January and February data were very volatile, likely due to the government shutdown. So truth probably lies somewhere in between those two prints, which would be about 100 and I think it's 166,000 on a 2-month average or 186 on a 3-month average. But we think the signal out of the employment report today will be that the economy is okay. Growth is indeed slowing. But if we add about 175,000 jobs on the month, it should be a signal that we're just sliding to moderate growth, not slipping into recession.
I don't want to throw cold water on the jobs number, which will be our top story. But that aside, I prefer looking at the JOLTS, the Job Opening and Labor Turnover Survey, every month. There's 7.5 million open jobs in America. That said, I bring it up, Michael, because if there's that many open spots, if we get a weak jobs number, is it a sign of a slowing economy or simply a sign of we're running out of workers?
Well, I think I would interpret it more as we're slowing down. And so
Why is that? Because if there's 7.5 million open jobs, that means companies can't find people.
Well, that's right. So we certainly hear that there are acute shortages in certain industries, and it is one of the reasons why wages are indeed moving higher. But I tend to take a signal about expansion and contraction from the employment data. So I hear what you're saying, but if we get another 20,000 print, I would take that as a negative signal more than anything else.
If we get a weaker number today, does that all but guarantee a Fed rate cut this year, Michael?
If we had a number that repeated the February print, that would be on the table in the May meeting. I think
if we get a high number, does it take it off the table quickly?
Yes.
That was quick.
I think we've seen 3 data points this week that are very important. ISM in the mid-50s, 17.5 million in auto sales, and we think a decent employment report. That's all March data post-shutdown. It should confirm a modest growth environment and reduce the risk of a near-term recession.